So hi again, everyone. You're
Hello.
probably all sick of me by now. So in this session, we're just going to talk about the obsession with Silicon Valley and the constant obsession to find the new Bay Area. So how does Central Eastern Europe actually compare to that? So I'll be joined by the experts, Bogdan, Chris, and David. I think it will be better for those who still, although I think there's not a lot of you, but for those who still don't know you, that you just like quickly introduce yourselves. What do you do, etc.
So, hi, I'm David from JNT Ventures. We are Prague-based fund. We are staying in Czech Republic. We do invest in Czech Republic and also in the whole region. We have a two portfolio of companies in Croatia, and I believe that this region has a big potential. So that's why I'm here, and I hope to meet plenty of new startups.
Great to have you here, David. My name is Chris. I'm with Elevator Ventures, Raiffeisen Bank International's corporate VC fund. We manage 50 million euro. We are raising another fund soon, another 50. And I'm looking forward to meet anyone who is building a fintech company or sort of a related technology company, more on the Series A stage. So obviously post-revenue, feel free to find me, and passing the word to you, Bogdan.
Hello, everybody. My name is Bogdan Iordache. I'm the general partner at Underlying Ventures. We are a $20 million privately raised fund from Romania. We invest across CEE at pre-seed, seed stages. We have one investment in Croatia and another one recently in Serbia. It's a pleasure to be here.
Thanks, everyone. So it's not a secret that CEE countries offer a prospering environment for different tech companies. So we can often hear that the region is referred to as the potential new Silicon Valley. So is it really, though? What is your view on this? Maybe, David, we can start with you.
I mean, partially you are correct and partially you are not correct. Silicon Valley is a great place to actually start startups. And I believe that actually in our region, we have the tech talent and we can build great solution at potentially great global companies because technologically wise, our founders are very strong and you will find plenty of these kind of founders even in a Silicon Valley, in a great startups which are actually growing super fast. On the other hand, our companies are still not, or the founders, they still don't have the mentality of the Silicon Valley founders where every single solution, every single startup is going to the investors and actually pitching to change the world or change the way how we live. So that's something what I feel we are still missing here. The founders in our region are very good entrepreneurs, but we are still missing that bit of I don't want to say bullshitting, but that big of a big vision and actually the drive to actually build a global huge company. So on the tech side, we can compare. On the other side, we can't really, not yet at least.
Chris?
I second David. I would only like to add, without shooting cliches to the crowd, that out of experience, just by way of construction, we have, of course, many countries here in Central Eastern Europe and in Europe overall. But we have, of course, Germany, France, where you can really build a company, and it doesn't necessarily have to go beyond its borders. But in the US, it's a bit different. If you stay in the US, you can still be a great company. And out of experience, I can tell that the opportunities and the companies that we look at, Series A stage, they can still be at a stage where they say, okay, I'm a Polish company. We have 40 million people. I can service these guys and, raise the round and let's see what happens. Still test in Poland. And then, we can go to Germany. We can then, go to Austria. Then, maybe to the Balkans even. And this never works out of experience. Maybe there is a case where, this was the case. There are some certain business models, consumer finance companies, they can't just jump from, Hungary, Austria to Germany. They need to get license, build up operations, have teams, salespeople selling to clients, etc., etc. But if you talk about holistically, and if you're hunting really unicorns, that are boundaryless in terms of geography, this mentality that, okay, I just test in Poland, I have 1 million revenue, and then let's see what happens, it never really works. And I think this is something that, you know, in the US, they don't even have to think about it, because if they just stay American, they can succeed. And I think that's an important aspect here. Bogdan, what say you?
Yeah, I mean, I think it really depends on, like, when you think about Silicon Valley, what does Silicon Valley mean? Like, definitely Silicon Valley does a lot of good things that we should learn from and try to copy or at least adapt. But I don't think there will be another Silicon Valley, not even in the US. There will be multiple tech centers. CEE will become definitely a significant, you know, ecosystem, technological ecosystem. We already have lots of billion-dollar companies like Infobip and many others, and we'll only see more. But we don't play in the same, like, we don't swim in the same lake as, you know, the guys from San Francisco. We don't have the same culture. We don't have access to the same level of capital. So things are just different. Like, to become the next Silicon Valley, let's say just to become a significant technology ecosystem in the world, what are the things that we could learn? And I think you were referring to, you know, this big vision and mentality. And we were just discussing about this, like many times the founders that you meet have, you know, objectives that are not really venture compatible. I have a small fund. I have only a $20 million fund. But in order to invest at the early stages and sort of to do the type of investments that are a good fit with my fund model, I need every company in my portfolio to have a potential outcome of above 500 million. That is massive. And, you know, you have really big companies like, I don't know, I was looking at Mixpanel these days, which only makes less than 100 million in revenue. So it's like, it's really rare to find companies like that. Being able to think about, like, you have this shorter plan about viability, how you're going to build the product, how you're going to get the first customers. That's very tactical, and it's one and it's needed. But in second layer of that is, you know, what's your big vision? How can you get to build a really big company? And that might not be the end for most companies, and that's totally fine. But in order to be sort of the next Silicon Valley, I think we just need more companies like that who will be massive in some of the verticals out there.
Basically, we don't and can't really copy it, but there's certain stuff that we could certainly learn from it. We're gonna come back to this later when we talk about the founders. So obviously CEE has a lot of unicorns coming from it. So how did they actually affect the countries that you come from, the whole startup ecosystem? Did that make them, I think like when we think of Infobip, I think it actually inspired people to stay in the region and focus on the region. Like, you can build a unicorn here, but how is it, like, Bogdan, we can start with you with UiPath. Like, obviously they have IPO'd, they're now a US registered company.
Yeah,
But
it's a Romanian-born unicorn. Yeah. I would not consider it a Romanian company anymore entirely, at least, because while their biggest company office is still in Bucharest, the leadership team is now in New York. So like UiPath is really unique, not only for Romania or CEE, it's really unique for Europe. It's the fastest growing company to 100 million ARR in Europe ever, and second fastest in the world after Slack. So that being said, it's quite an exceptional company, you know, in its own, and it has definitely impacted the local market in multiple ways. Ambition and you know, this like hope of founders building something really big out of Bucharest is definitely there. But in the same time, it was the first company who got a lot of expertise about how to scale like massively using all the potential tactics and channels and whatever. And now you have this type of knowledge right next to you, so you can hire those people, you can get them for advising or consultancy gigs. That's really important. And the second or third element would be the fact that it has put, because it has been such an outstanding success, it has put Romania in all honesty, mostly Bucharest on the map. And nowadays we have VCs coming from all around the world, like even like from New York, you have people flying into Bucharest to meet founders. It's absolutely ridiculous. We have, that's really good, because me as an investor now, I have a high level of competition on one hand, but then also really good capital to follow on my investments. So that's excellent. Yeah.
Thanks. Chris, David, do you have any comments, maybe?
A very short one. I don't want to talk about the things that Bogdan highlighted, but approaching it from a different angle. I mean, we sit in Austria as the HQ of Raiffeisen, and I mean, out of experience, the two unicorns that are there are GoStudent and Bitpanda. GoStudent is being the edtech company, Bitpanda is the crypto app. And these businesses haven't exited yet, right? But we see, or I see actually, if you just take a look around me, a network effect that I know 3 guys that joined GoStudent when it was I think 15 people strong company. Now it's, I don't know, 1,500 and all over the world. And I see that, I mean, these guys haven't cashed in. Of course, they got their big bonuses and all that by delivering on milestones, etc., etc. But I see them that these guys are not there with the company anymore. They said that was a nice journey. And they are all establishing their own B2B sales houses, helping companies, startups. And that's, their way of giving back. So, we don't talk about guys that are just counting their, old-timer Porsches, but we talk about guys that's still very hungry. And, that's their form of giving back, obviously, by focusing on this specific part of the business. But that's just an example of, you don't need to have a full-blown exit, but rather, these guys that just sort of left the company after supporting it for 5-10 years, that they're giving back to society, giving back to the startup scene, and, just leveraging what they learn. And that's scaling, right?
Yeah, I would like to actually add that all those companies we see currently in our region, being it UiPath or being it Infobip, or in Czech Republic we have Product Board or Rohlik, all those companies are actually great for the ecosystem because they put us on the map. So the big global guys, big global funds are actually flying into our countries, to our conferences. They are start dedicating the partners and also some parts of their funds to actually travel within the whole CEE and SE region to actually look for great companies so they can actually invest in them. So that said, the capital actually is here available from a global guys, and the founders, they are able to actually touch it. I mean, all those huge unicorns and all those people who actually already worked for them can also give back to the community, and they are trying to do that. I mean, Infobip has a great success story in Croatia, being almost bootstrapped. Now with the initiative of the Startup Tribe, it's also like pulling all the Croatian startups together, trying to work with them, doing this conference. UiPath also, people work for UiPath. Now they're joining other startups. They're also kind of enhancing the whole community. The same we have in Czech Republic. All those guys who actually experience the path and actually can share back the experience and the contacts. That's something what actually puts our ecosystems to the higher level. And on top of that, in a current environment where every investor actually seeks the capital efficiency, I mean, we as our region, we should be the winners of that. Because our founders are great entrepreneurs and they are able to build companies with much bigger capital efficiency than the Western startups. And that's something what is now actually what the big guns are looking for. Some good companies at a reasonable valuation which can actually keep growing, and they didn't burn 10 million euros to just build 1 million ARR. So we should actually utilize that, and all those little little pieces kind of builds together. So I really believe that the CE and SE region has the big potential.
Thanks. So I'm going to come back to a subject that we actually touched upon during the first question. So how would you compare the founders of CEE and those of Silicon Valley, but not just them, but the VCs or CVCs as well? David, I think you have a lot of stuff to say on this topic, so we're going to start with you.
You have 15 minutes, David.
That'll be enough, maybe.
So basically, I mean, in the US, when you speak with the founders, they all have these huge visions. They might not even have the tech, they might not even have the company, but they actually want to change something. They want to change the way how we live, to change how we think about life, change their full industry. The founders in our region, they want to build a company. They are entrepreneurs. The vision is kind of like going together with them. Once they grow, the vision is 10 meters ahead of them. And if you're building the company in this way, that the vision is 10 meters in front of you, I mean, we mentioned it before, that the founders basically, they get 1 million ARR. It's like, oh, great. So now I'm going to get to next level. Now I can expand to different country. It's a different kind of building of a company than when you actually say, okay, I want to be a huge global company since day one. You set up your processes, your legal entities and everything since day one, and you kind of go global. So our founders should actually think about how to build a company and not to think only one step ahead. That's amazing for being an entrepreneur. You're running the company very efficiently and you can actually reach and you can build a lifestyle business, but it will not allow you to go the startup way. Because then if you go for the Series A or Series B and you speak with the big investors, they are really looking for your company to be sold at 1.2 billion euros or €1 billion. But actually, some of the founders are happy if they're going to be sold for 50 million, and that's success as well. On the other hand, it's not sufficient for the huge funds. So maybe you can add something, Bogdan? Krisztian?
I mean, you mentioned the fact that in the US, founders have, like, all the founders have this big vision. Like, don't get me wrong, 90% of that is bullshit. Like, you know, they tell you all these nice stories, and it's sort of obvious that they will never get there, and you know, the products that they do are sort of mediocre. Eastern Europe has the opposite problem. Obviously, not all the companies that, you know, founders start can be unicorns or big companies, but definitely some of the companies that are started in Eastern Europe can become much bigger than the founders present. So it's sort of the founder's job to figure out how much they can realistically stretch the vision that they have in order to start thinking and building a plan for a company as big as possible out of whatever they are doing. Because the effort in doing a small company and the effort in doing a big company, it's sort of the same. I mean, you still work, you know, 80 hours a week. It really doesn't matter. What it matters is just the trajectory that you put yourself on. And like my personal theory around that is that culturally, Eastern Europe has always been a very unstable ground in the last hundreds of years. So it's sort of, you know, difficult from a cultural point of view to plan for greatness, for big things, because you just don't have this exercise. Everybody is planning for survival. Everybody is focusing on, you know, how do I get to break even? How do I get to the first million? Like, because you got me the chance to talk about this, I want to compare the evolution of the founders with the evolution of the investors in CE, because the investor mentality in CE is also, you know, part of this game. Before doing investments, I was a founder, a modest founder, modestly successful. Definitely no UiPath material here. But at some point, I had a company who had, you know, proprietary technology, a good team, clients, etc., etc. And the only investment offer that we got was 10,000 euros for 51% of the company. So that was 2008. That's like 15 years ago, right? 5 years later, you see UiPath raising $1.5 million at seed with 200K revenue. And 5 years later, you see 1 million seed rounds with almost no revenue. And now you see seed rounds which are 2 or 3 million with a revenue which is in the hundreds of thousands. I think the investment landscape is also progressing very fast. Even sometimes maybe faster or slower than the founders, but definitely fast. And now you can build great companies out of CE because you also have the cash, and you also have like much better access to investors than just a decade ago.
Thanks. In 4 minutes, if it's okay. What did the MC say? Questions in 4 minutes, right? Okay. So yeah, Chris, do you have anything to add on this?
I want it to be last because my perspective maybe is the most boring one. It's I just came off a meeting with a Greek fund that told me in the face that don't give me. I mean, obviously between funds, that's the market. So we pitch our portfolio companies to each other, and then people like it or not. And then this guy told me that hey, Chris, I mean, never give me a company that burns cash. I said, oh, okay, okay, that's I mean, this is maybe an extreme example, but without being a judge of things and being too clever, because the guy has a lot more years experience than I have. Probably these companies then that he touches are not going to be the one success stories that you will read in TechCrunch, that they conquer the world and raise 2 rounds within 24 months and then going to be IPO'd in 3 years, but rather these growth equity cases as we maybe call them. So they're just to connect to this mentality between CE and the Valley or US in general. And to give you this boring perspective, we are a CVC, meaning that there is one limited partner, Raiffeisen, giving us the money. And obviously, I mean, we are, I think, the second endeavor of this entity. The first one was 15 years ago and failed miserably. Let's see about us, but hopefully not. So basically, these companies started, okay, let's create a fund. We have a budget for innovation. And obviously, there's an adverse selection because you want to invest in companies that are catering to the mother entity. So obviously, if I create a VC out of a auto company, I would be investing in auto technology, developing software companies, and obviously, my bosses, my IC would have to like that product, which naturally creates an adverse selection. But what I'm seeing now is that this first round of CVCs, I mean, even in Central Eastern Europe, there is now maybe this second round. So at least if you talk about banks or big manufacturing companies, they are raising their second and third funds, and progressively these are going to get away from the mothership, meaning that the GPs, the managers are more independent, their ICs are not necessarily sitting in the mother entity, but the decision is with them, which is a good thing because, by definition, VC is investing in growth, and that's why the money is given to these companies, right? So that's basically the perspective. But even at this level where we are raising our second fund, I can tell you that even we are straying a bit away from this mothership and trying to find companies that fit, let's say, the classic VC criteria, that we invest in growth, not the safe bets that people start off with if they are launching a CVC, obviously. So that was my boring perspective.
Yeah, I just want to add something because this is something that we've talked about slightly in the panel. I think it's important for founders to know that not all venture funds are equal. Even funds that invest, that they call themselves venture funds and they invest at pre-seed or seed, they have different models. And they invest in companies who can have very different outcomes. So there are funds who invest at pre-seed, and their hope is that the biggest winner in their portfolio will be 100 million. And there are other funds who are investing the same amount at the same stage in startups, and their hope, based on their model, is that their winner will be a company who will be sold for $1 billion or more. It's really important for founders to ask the investor in what type of companies do you actually invest? Like, how does a winner look for you? Because sometimes there is this mismatch of expectations, because everybody presents themselves as a pre-seed fund, but actually the fund models are totally different.
Yeah, I mean, it's very important for the founders to actually align the interests with all investors they have on board, because there is nothing worse than all your stakeholders, shareholders actually sit in the room and they don't have aligned expectations. So I can tell you then it's a big problem for everybody around the table, because you will just not agree. And after all, I mean, it's almost a marriage when you have all the shareholders on board it. I think it's also very important to understand that not every business model is really good for the venture capital. I mean, the venture capital business, I mean, we put usually quite high valuations compared to the standard valuation models of a normal SME businesses or even publicly traded businesses, because we believe in the potential. And the potential is being seen as something that can really blow up in terms of revenues, what goes at least 2 times, 3 times year on year. Basically, if the company grows less than 2 times year on year, then it's on a very tricky path, and it might not be the venture capital case. And actually, if you don't keep the growth 2-3 years after each other, then you might have an issue, because you will never be able to fundraise the next round, and basically the whole venture capital story dies, and suddenly you're looking at a company which might actually be almost profitable, but is not keeping the growth, so then you can't be sold for high multiples. You will look at the EBITDA level, and at EBITDA level, it's super low. So you might be surprised, but the value of the company might suddenly really change just by not keeping the growth or having the good potential or the vision how you're going to change it.
Okay, we are a bit short on time, so we're just going to start with the Q&A. Yes?
Thank you very much, and I apologize for interruption earlier. You were mentioning about the founders in the US that have a more big vision. Well, here they want to construct a company. And how much fault of that is the mentality of the venture capital environment in Europe? And how much are they more conservative to turn the money around comparing to US? And in the long term, how good is that for the competitiveness of Europe comparing to the US and Asia, that is actually much more aggressively founding the founders and giving them an environment to think big? Is Europe too conservative from that perspective? Thank you.
Yeah, I mean, Europe is definitely more conservative than the US, but in the US, everybody who is starting something imagines that they can sell this in the entire US. Like, there's nobody in the US pitching you that they're gonna sell this in the US and then expanding to Europe. Like, nobody cares. So this is very first-hand thing for them. Like, I'm in the US, I'm gonna scale this company in the US. In Europe, you need this stretch of imagination where you think, you know, I'm from Romania, I'm gonna sell this. Well, not in Romania, actually, I'm gonna sell this in the US and Canada and the UK and whatever. So it's, I think we are in a sort of an unnatural position from this point of view, but it is what it is. And yeah, definitely, I mean, the venture capital in Europe has been throughout the time much more conservative. Now, going back to what I was saying, it has become much more dynamic and risk-taking in the last 5 years, mostly because of the competition with the US funds.
You still have a Europe with the EU with 400 million people there, so it's quite a big economy. Yes, you do have a cultural differences between, you know, selling in Romania comparing to Austria, Germany, France, Spain, and others. But people who are inside the US, they also know they're starting to have a cultural differences there as well in terms of where do you start up a company. You don't start up a company, for example, in Oklahoma. I'm not pinpointing very much Oklahoma because I studied there, so I understand that. But comparing to the regional, being in California, being in Washington, being in around Delaware in that region as well. So they fought through those differences. I'm just saying that maybe the venture capitalists should be more aggressive as well and promoting the founders to think big as well.
Definitely, that's part of the game.
Yeah, maybe I would just comment. I mean, Europe is definitely more conservative, but on the other hand, we also have here the European funds, and they go also very much aggressive. You see huge rounds at the crazy high valuations. It can actually happen. The biggest issue is that the founders, they expect these kind of valuations, always arguing, oh, my competitor in the Silicon Valley fund raised that amount for that kind of valuation. And I mean, they don't take into account that they have much lower cost in here and usually different markets. So the market is much more fragmented, and also it takes usually one more round to get to the point where they would like to get, right? But on the other hand, actually venture capitalists, we would like to see the big rounds, and many funds are happy to jump in the round, which is like overvalued once they actually believe in the vision, and even at the pre-seed stage. So you can touch on, as Bogdan mentioned, 2-3 million as a pre-seed stage, almost no revenues, and that's kind of already the way. But on the other hand, also in Europe, we are more conservative, which actually is advantage nowadays, and for our region, even bigger advantage, because we didn't have such a drop as we saw in the West, in the West, compared to with all the valuations, all the rounds, and so much written off of capital. So the capital efficiency is nowadays in the venture capital very important, and we can thrive on that.